if I was trying to come up with a plan to manage through the chaos, like I don't know that I could time the market. I think that I would just kind of own something very scarce and desirable. So if you look at the crypto universe, the idea of crypto is to have some kind of property that's in lieu of a currency or in lieu of a commodity. There's 19,920 cryptos according to CoinMarketCap. One of them amounts to about half of that market cap. That's Bitcoin. So there's one thing that had a fair distribution, an ethical distribution. It's been deemed universally as a commodity. There is no issuer. There's no management team. Satoshi's gone. There's no the protocol was set at version 0.1, not change, right? 21 million, 1 megabyte block size, 10 minutes a block. The mining rewards were set for until the year 2140, right? Everything is set for the next 120 years as of now, 13 years later. You've got this one thing, as Chair Gensler would say, a commodity is something without an issuer. There's no issuer of gold or corn or soybeans or timber or Bitcoin. A commodity is a much higher form of property than a security. A security has an issuer. The highest form of security, if you must own a security, is own Apple or Google or Microsoft, because they are transnational, publicly traded monopolies that have a very mature management team, mature governance structures. They are embedded in the middle of 100 million corporations, right? It's kind of hard to see how you rip them out if you must own a security, but they're still inferior to a commodity, or in this case, Bitcoin is better than a commodity. It has the legal, ethical standing of a commodity, no issuer. It's universally useful, right? But it is a scarcity because there's only 21 million. And if you look at my Twitter feed today, I posted an interesting video of the Uganda gold find, where they found enough gold ore in Uganda to create 330,000 tons of gold, which means it would not triple, but 2.5, almost triple the gold supply, or the supply of gold that we have found since the beginning of time on this earth.
Is that right?
So gold's the king commodity, and it's the highest stock to flow, but it's still just a commodity, and it's infinite. You can make more in human ingenuity, and given a high enough price, or if I increase the price by a factor of 10, you get a lot of incentive to turn that ore into refined gold. And the same is the problem with oil, natural gas, soybeans, corn, steel, lumber, the like, even real estate. Real estate's valued based on the square foot. And so you got 1 million square feet of commercial real estate. How scarce is that? Well, it's scarce until I create 10 million more square feet of commercial real estate, and it's less scarce. And so if you look at this in that way, what you realize is there's one digital commodity that is a scarcity. And if you have a long time horizon, if you're willing to wait a decade, if you're willing to live, if you're willing to be beat this way and that, tossed on the stormy seas of fate by the monetary winds that blow, they will blow in your face, they will blow to your back, and if you're going to stand on the deck or lash yourself to the deck, and you're prepared for a very rough journey, you should be able to make it to the promised land with 100% certainty. Not 100% certainty, but it's an opportunity, right? And in my opinion, the odds are better of a good outcome than the odds that my ancestors took when they left, Lucerne, Switzerland in 1730, and they sailed to Philadelphia, right? And that was dangerous. And that's not nearly as dangerous a journey as when people left Europe to go to Australia, where they had like a 30% mortality rate. I think the mortality rate, going to the New World was like 5%, right? It was dangerous.
Oh, absolutely. Yeah.
So I was saying that the macroeconomic winds are blowing, and if you're an investor, you just have to decide how you're going to deal with it. And I think one choice is be caught up in the maelstrom and attempt to trade your way out of it by slavish devotion to the news of the day and attempting to predict what the central bank will do, and then try to figure out whether or not this is a good entry point or not a good entry point. And that's a recipe for anxiety, especially trying to pick the bottom and pick the top. And that's hard. Yeah, I think it's well, the two thoughts. One, a rational strategy is dollar cost averaging into scarce, desirable assets that, someone that's more affluent and more informed than you will want to buy from you in a decade. So if I was trying to come up with a plan to manage through the chaos, like I don't know that I could time the market. I think that I would just kind of dollar cost average my cash flows into a portfolio of property that was scarce, that was desirable, that would hold its value. And with the caveat that I need to be able to afford to maintain it. So if I could buy high quality property that I can afford to maintain for a decade, then as cash flows arrive, I would just allocate accordingly. And if you like Bitcoin, then Bitcoin, just dollar cost averaging into Bitcoin is a similar thing to that and rational. I think if you look at the 4-year simple moving average of Bitcoin, it kind of reflects something synonymous to the book value of the network, because for 1,458 days, that number reflects the trading volume or the trading price of Bitcoin. So it's traded billions of dollars a day, 1,458 times. And so by the time you calculate that number, it typically lags the overall price, but it's gone up consistently for the history of the asset, for obvious reason. And right now, that number is, as of today, it's 21,705. So 21,000 and change. So Bitcoin is kind of touching that number.
Well, that's good.
And if you're a dollar cost averager, or a conservative Bitcoin investor, I think that you would look at that and think, yeah, I mean, well, for obvious reason, Bitcoin hasn't looked this cheap since March 20th of 2020. Like that was the last time when it touched this. And then you got to go back to like February of 2019. And then you got to go all the way back to 2015. So I think if you look at the near term, Bitcoin looks like a volatile risk asset in the near term. And if your time frame is near term, if it's a high frequency time frame, then you kind of got to trade Bitcoin like a high volatility risk asset, or an amped up risk asset. And if you're a low frequency, long-term trader, if you're buying it with expectation that a decade from now, it'll be worth more. Now it starts to look like a store of value, non-risk asset, because there's no management team, there's no product cycle, there's no employee base, there's no competitors. It's not a company. It's got no nexus. It's not in a country. It's not land. You can't produce more of it. It's a different thing.